All right. Welcome back to the channel to everyone out there on YouTube. This is Futures Trading with Mike. Today, I want to talk about something that I've been receiving some messages on in reference to yesterday's trade session. I took a few trades. I think it was just 2 trades, okay? But they allowed me to make, decent amount of profit out of the market, okay? So I want to talk about today how you can increase your win rate, meaning being able to expand instead of just scalping for a few ticks here and there, how you can basically go for more profit when you're trading each and every day. Me, I'm a supply and demand style trader. So if you've been following the channel, you know that I trade a certain strategy that allows me to profit in the markets. Now, primarily I can trade from just my 12 range chart. Some people may trade time-based charts, so it may be a 5-minute chart, so whatever works out for you. But I also showed a strategy that gives you more, confirmation, especially if you're a new trader or a beginner trader, using paired charts together. So basically trading supply and demand, but being able to allow yourself to receive double confirmation in the markets to allow you to enter and take a decent trade, okay? But that is not going to be talked about in this video. There are tons of videos on the channel where I go over that strategy. I go over and talk about in detail, breaking that strategy down. So if you're someone that's interested in that, go ahead and subscribe to the channel, okay? I have over 400 videos here on the channel packed with great information. The information I share on my channel is it's free, okay? I do not, basically have a mentorship. I'm not a teacher. I'm not an educator. I just share my experience, the knowledge that I know, and passing it forward. I just think that's the greatest thing in life, to be able to do so, is passing things that you know forward to help someone else out. And that's why I'm making these videos, okay? Now, let's go ahead and talk about, yesterday's trading session. I'm going to show you the two trade setups and basically cover or go over how you can increase your win rate, how you can gain more profit out of the market, how I do it on a daily basis, because that is the goal that I'm set out to do daily now. As I stated earlier part in the year, this year, at the beginning when I started talking about my goals for 2023, that is to be able to increase my profits in the sense of staying in the trade longer, okay? And I'm going to show you how I did it yesterday. I'm going to show you how I do it. And I'm going to, continue doing it going forward, because it is a goal of mine to be able to achieve going forward this year and going forward. As traders, we want to be able to do what? We want to be able to perfect things and become better and better, so that we can become better traders, right? We want to become a great trader, right? Not to say that you're not going to take a small loss or a loss here and there, whatever the case is, but I always talk about what? Having green days each and every day to be successful and to be able to gain profits here in this market, all right? Let's break it down. Let's talk about it right now, all right? So, first and foremost, what I like to do, I always like to see, either a high or some type of low, okay? I don't like trading so much in a lot of congestion. So I'm looking for where there's maybe a say like a high right here, or price made a swing to the downside and made some type of a high and a low, or a push up here where it made a low and a high. So I'm looking for decent swings within the market first and foremost. So understand that, okay? Because I'm looking for basically if you want to say a measured area in a sense, but to me, I'm just basically looking at market structure, but also depicting where are the greater moves at to be able to capitalize when price comes back to a supply or demand zone. So in my mind, I'm looking for a decent sized move, okay, whether it's to the upside or downside, and looking to see if there is a demand or supply area that's created, and one that is a high probability supply or demand area created, and that's based upon a couple of things. I want to see a breakup structure, okay, of course, and then 2, I want to see where there's a gap, okay, a gap that needs to be filled, okay. Price comes back to it, we get the rejection, we look for failure, whatever the case be, and we go either short or long. So we're going to talk about that in 2 instances here, on a long entry and a short entry that I took yesterday, and hopefully this answers the questions to the messages or those individuals that sent messages to me yesterday, okay? And some individuals saw, where I kind of used a Fibonacci retracement tool. I'm not a Fibonacci trader, where I trade off of fib levels. No, I don't do that. Sometimes I like to see in a measured move or a decent swing to the upside or swing to the downside, just to kind of see in reference to percentage-wise, where the midpoint is, pretty much the 50% area point is. Because sometimes I like to see, a lot of times, I should say sometimes, I like to take my trades from below the 50% area when I'm going long, or I like to trade. If it's above the 50% area, I'm looking for maybe a trade to go short. Okay, that doesn't mean I'm not saying I'm using the Fibonacci tool to gauge as far as like take my trades from certain percentage levels. Okay, I'm not doing that. I'm just kind of gauging in reference from a larger swing to the upside or downside where price is in relation to the 50% area in a case. And so it does kind of give me more means of confirmation, because those that have been following the channel know that I also use volume profile. Volume is important regardless at the end of the day, okay? And one thing, if you understand anything about trading, you want to buy the lows, sell the highs. So that means, well, you may say, Mike, what does that mean? I'm looking to sell above a high volume area, okay? I'm looking to buy below a high volume area, okay? It just makes sense. Price likes to travel from the top end of a high volume area back to the medium or mean, and travel back to through a low volume area to a high volume area. If you're going long, price likes to travel from the lower portion or the edge of a high volume area through a low volume area back to the next high volume area, okay? So buy the lows, sell the highs. Now, let's jump into this and break this down. First and foremost, what I want to see is a decent size move to the upside, okay? This is where my long came into play first and foremost yesterday. So what I did was I saw we had a low here and then a high here, okay? I saw there was a low, I saw there was a high here on this move to the upside, okay? All right. Yes, of course, we had little swings to the upside as price moved higher, but I'm looking at the overall move before price turned direction. So we got a high here, a low here, okay, on the swing, and then another high. So there's a leg here from the bottom to the top, all right? And we're going to talk about how I break this down or go into detail about, in this case, a price pulling back where there was an actual demand area. So I waited for that. I had already drawn out my box here. Once price had made this low here and tapped into or made this high here, I said, okay, here is a leg to the upside. This is a decent move to the upside here. Price did break structure to the upside and left, gap. Left a gap, meaning the area to fill. Meaning price has to come back to this area here and tap into it. So when price comes back to this area, we got a gap that's being filled, and we have a demand zone when price broke structure to the upside, correct? So two things I always talk about in videos and things I like to look for, especially when it comes to high probability trades, is a break of structure, and I want to see an area or a gap to fill, okay? Some individuals, some traders may call it what's called a FVG, a fair value gap area. Yes, it could be called that, depending on your style of trading or whatever the case is. I just like to call it a gap. I like to keep things simple, okay? You can call it FVG if you want to, which is a fair value gap if you choose to, whatever the case is. But for me, I just call it a gap. I say, hey, price left a gap here. It's got to fill this area back to this demand area. When it gets there, it's a high probability setup. I'm going to look for rejection to go long, okay? But let's kind of talk about this. I did use the fib retracement tool yesterday. I'm going to show you how I do it. I go from the lower portion of this swing to the upside here. We had this major swing to the upside. Mark it from here to the tops up here, okay? Now, this is the 100% area. We get back to the top here. In this case here. So what I like to see, like I said, the 100% is down here, the 0% up there, 50%. I'm looking at the midpoint, the 50% area, because I like to take my trades below the 50% area if I'm going long and above the 50% area, if I'm going short, okay? I'm not saying I'm trading off of these fib levels and price gets back to a certain, a level. I'm trading off of supply and demand zones. Let's get that right, okay? Don't get it misconstrued. All right, so I just use this to kind of gauge, in a sense, where I can possibly look for a better or a higher probability trade setup. So one, we got a break of structure, gap. And price pulls back. It's below the 50% area. Man, oh man, there's so much confirmation there, and the point, and the thing that price is below. Like a fourth confirmation, price is below the high volume area here, okay? Which I always take my trades, buy the lows, okay? If you're going long, sell the highs, okay? In this case here, we're looking for price to come back to the demand zone right here. Push to the upside, price pulls back, draw your box. Once price pushes to the upside and you got a decent move or leg to the upside, okay? Draw your demand zone, okay? When price pulls back, if you want to pull out your fib tool, you can go ahead and draw from the low to the high, okay? Price starts to pull back. Once it taps into that box, to that zone, like I always talk about in so many videos, draw your zone, wait for price to tap into it. If it doesn't tap into it, then just wait patiently, okay? Do not be impulsive or impatient about taking trades. You have to. If you want to increase your win rate, or if you want to be able to gain more profits out of the market, this is a solid way of being able to do so. But you must also understand and pay close attention to price action. So what I'm paying attention to is once price made this move here, okay? gap. We got some a breaking structure here. I'm going to go ahead and mark my zone. Now I'm just looking at price action as it's coming back down, making lower lows and lower highs. Pulls back pretty, pulls back decent here before pushing lower, right? Eventually it comes back down here, okay, to the zone. But as it makes its travel or a distance from this high back to this low here, I'm noticing that there's another swing that price formed to the downside, a major swing. Push down here, made a low, a high, and made a lower low here. So a decent swing. We're going to save that for the second thought here, where I actually went short at. But what I'm noticing here, once price comes back to this zone here, I'm looking to say, okay, if price rejects this area and it fails at this area, where could it possibly go back up to, okay? Is there a gap above me, okay? Is there an area of liquidity to where price could also maybe travel to on its way back up, okay? So when I saw this big swing here to the downside, look, there's liquidity resting here, 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 okay? Here, here, and here, okay? Because when price pushed down here, it pushed up, forming a swing to the downside. So think about it. At every high point on this, as price is swinging to the downside, there is liquidity at the back end of a swing where there's resistance at, or I should say, where there's resistance at, there's liquidity at. Where there's support at the back end, say right here, there's liquidity there. So, but not just that, I say, okay, I want to take a trade, if price taps into the supply zone here, is there room or an area for me to be able to safely get into a trade? Is there a gap that price needs to fill? Okay. Also, is there a swing high that price could, above it, that price could go up and, tap back into, or at least trade back up to? Yes, right here. Price push down here. Look, here, pull back, push lower. Leaving behind a gap. There's a swing here, and there's a high right here where liquidity is at. Liquidity also here. Swing, pull back, push down, liquidity here. Okay? And this is the top end of this major swing to the downside. So there's liquidity resting right here. Okay, of course. All right. So my target, when I saw price pulling back into this demand zone here, I was really focused on when it got there to see if it was going to reject, because I got happy when I saw the gap right here. I said, oh man, if price rejects this area here, we could travel all the way back and fill this gap back to this area of supply right here. Okay. Yes, this is supply. And we're going to talk about that, why I ended up taking a long here and a short here. But we're already talking about why I took a long here. Price got in here. I'm looking for the rejection. Got a break above, meaning a break of a candle to the upside green. I'm going long. I'm taking my trade. If you got in at 70, you're safe to clear at least up to, I'd say take it back up to 78. I got into a trade yesterday. I think I took out a little bit over 6 points on the first contract, and then 7, maybe a little bit over 7 on the second contract. I posted that entry out on the Discord community. Yes, if you're not part of our Discord community, I highly recommend you take the time right now. Do 2 things. Click on the subscribe button below now, and also join the Discord. The Discord link is down in the description portion of the video below. It's free of charge. Click on it. We have over 800 members. We may have 900 now that are just solid, good, loyal members of the community. And we talk about so much information. And a lot of us traders, we share our trades on the trading floor channel on the Discord server. So I'm going to talk about that at the end. I'll show you our Discord community. But long here, we got the rejection once price tapped into the zone here. Rejection. I saw a gap here. I'm taking it back to fill this gap right here. Okay. So once I got into the trade, I'm looking to the left-hand side. I say, okay, breaking a candle. I'm going long. Is there a gap on the area to fill? Yes. I'm taking it back all the way to the solid area of supply to fill this gap right here. So that's like 8 points you could have got, or maybe even 9 if you stayed into it. But definitely we have an area of resistance in here, or in a supply zone sitting there. So I got out, okay? I definitely got out. So I rode it up to here. Now let's take a look on the move to the downside. Did we receive any type of major swing, or, major measured move, I should say, in a sense, to the downside? Yes, we got a push down here, a significant decent pullback before pushing lower. So I'm going to say, in this case here, because I'm going to go short, okay, or maybe possibly look and see if there's an area of supply in which I could trade from, at the top end, okay, I'm going to go ahead and take out my retracement too, because I saw this decent move to the downside here. A swing here to the downside, a pullback, making a high before pushing lower. So I got a high here and a low here. So I'm going to draw, or just take the Fib tool if you want to, okay, the Fibonacci retracement from the high to the low. I got 100% here, down here is 0, right? again, if I'm wanting to go short, I'm looking to go short above the 50% area, all right? So what gives me confirmation, all right? So what I saw here was price make this low here, swinging to the up, pulling back, pushing lower. But as it moved to the downside here, as it moved to the downside, it made a swing down, pull back, swing down, pull back, right? I noticed where price formed a swing to the downside here, okay? Creating a supply zone. Why? It broke structure, the first part of my rule. Two, it created a gap, the second part of my rule. And then I'm just waiting for the pullback to the supply zone, right? So when price pulled back to the supply zone, I'm looking in reference to the the volume profile to see where it's at in relation to. We're at the upper edge, right? Remember what I said about selling the highs? Okay. All of this is setting up for a solid confirmation to do what? To look for an entry to go short. Above on the pullback, above the high volume area. Okay, first of all, it taps into a supply zone where there's a gap at, right? We feel the gap coming back up. Taps into a supply zone, okay? Above the high volume area here, okay? It broke structure on this move to the downside, okay? And we're above the 50% area. Man, how much more confirmation can you really receive to actually look for a solid entry to go short off this measured, this decent swing to the downside? When it does that, I'm just waiting for the rejection. When I get the break of a candle to the downside, where am I going to take it down to? I'm looking below to see if there's any formation of a gap, an area to fill below, or an area where price could actually get it. We have a decent move for price to pull back to, or I should say to move lower, right? When I look here, I saw price on the way back up. I saw price make a high here, pull back, okay? Boom, creating an area of demand in a sense here, because of the fact is we've got a nice move to the upside, right? Okay, aggressive buying is demand, aggressive selling is supply, right? So when I saw this gap here, I said price tap into the supply zone here. I got solid, all this means of confirmation right here. Take the short at the break, taking it back down to at least the area of where the aggressive buying started at, right back down to this demand area, and fill this gap. You get in right here on pretty much on the break right here, the full break of this red candle breaks below the green candle here. So if you get in here at 76, take it back down to at least 72, pick yourself up 4 points, okay? So yes, we're trading off of I'm a range style. I like using the range charts. So I'm looking for better moves to be able to increase my profits when I'm trading daily. So, yes, you can scalp for ticks, you can scalp for points, or whatever the case is, but the accumulation of ticks adds up to be points at the end of the day, okay? Regardless if you're taking a 2-point move, which is 8 ticks, and then depending on how many contracts you're trading too. Now, the ES, it does, you do have I would say an increased margin in a sense. Well, I shouldn't say increased margin because it's 400, depending on your broker. Some brokers are mostly $400 a contract to trade the ES, whatever the case is. But what I'm trying to get at is that the tick value size is higher, okay? But you must also understand that with the ES, it's $12.50 a tick, but you can also take $12.50 tick loss if you're not into the right trade. So use all this information, use all these confirmation tools, and incorporate them, inclusively to give you or to allow you to have more confirmation when you're trading supply and demand, okay? Understand how to use them, okay? That's the reason why I use, the Fibonacci tool from time to time. I pull it out just to kind of see where we are in reference to a decent move, okay? But I'm not saying you have to use it at all. I'm not trading off the levels or anything like that. I'm just using it in reference to, what price is at, okay? Is it below or above the 50% area, okay? But my main thing is I always want to see a break of structure, a gap, and, I'm looking where to see where price is at in relation to the high volume area, okay? Buy the lows, sell the highs, all right? I truly hope that this video here helps tons of individuals out there, and to allow you to be able to increase your profits, to be able to make more money out of the markets, go from maybe 2 or 3 times the amount of money to 10 times the amount of money on a daily basis, to where you get to the point where you're starting to build your account and allow yourself to be able to trade, leverage more money into the market, trade more contracts. But like I always say, take baby steps to build up an account and get to where you want to be. But this way of what I'm trying to show you, if you look for it and trade it correctly, you should be solid. One thing you must always understand too, every trade is not going to work out. So many people think that they jump from one strategy to the next strategy because something may not pan out, and they're quickly, shifting over to something else. take the time to fully see something through before you make a major shift or a change. All right. Okay. Yes. Sometimes I get into a trade. It's kind of iffy. It's kind of shaky. It's not moving quick enough to where there's enough momentum in the market, and I get out because I do not want to take any type of large drawdown. I've been there and done that years ago, and a lot of people are fighting through that same struggle day to day. Okay. So protect yourself, protect your investment, protect your capital when you're trading, and practice proper risk management at the end of the day. All right. That's all I'm going to say in this video about that topic there. Let's go ahead and move over to the Discord community right quick. This is the Discord community. Okay, we have a general chat channel. Okay, and basically what that is that if you have any type of questions, look, our community is surrounded around future traders. So if you're a futures trader, you know, it's definitely for you. All right. The general chat channel on the server is for individuals to ask questions to other community members about certain things covering futures trading. So whatever that topic may be, whatever that question may be, someone's going to have the answer. I may not at all times be able to answer a question, but hey, we have a team of almost over 200 members. Someone can have, and we're continuously growing by the day, someone will have the answer, or multiple people will have an answer, okay? So also we have the trading floor. Now the trading floor is designed or set up specifically for individuals who are interested in sharing their trades, screenshotting and sharing their entries, whatever the case is. And it's an area for you to, you know, where you can basically kind of, let's say, learn, but maybe grasp an understanding of why individuals took certain trades. Okay, not everyone trades supply and demand on this channel. Some people trade different strategies, but it's a way for us to be able to share our entries. I'm on here. I share my entries pretty much daily whenever I am trading. Like right here, tons of people, we share our trades. We share it. We screenshot them and throw them out here in the community. That's what the trading floor is for. If you're going to share information on the trading floor, meaning not share information, it is set up to share your trades. Okay. If you're going to share or say, hey, I taken a trade here, screenshot it. Okay. Because that's what this trading floor is. Part of the rules here on the channel. If you're going to share a trade or show a trade that you took, screenshot your entries so the community can see, so that they can grasp an understanding, because it may help someone else out in the community understand why you took that trade. All right. The general chat is, like I said, if you're interested in sharing and talking about information surrounding anything pertaining to the future markets, okay, it's there for you to be able to do so. Futures trading, okay? We don't do stocks, options, Forex on this channel here. So it's about futures trading on this channel. Outside of that, that's pretty much all I have for you guys, or YouTube community out here. Look, I appreciate everyone who's tuned in and on the daily. And if you're a first-time viewer here on the channel, go ahead, click on that subscribe button down below. Okay? Join the community here. Make sure to turn your post notifications on. Simply click on the bell next to the subscribe button as well. All right? Please, and drop a like on the video. I hope you found some value in the content or the information that I shared today. I just want to be able to help individuals out and share what I know, so that so people can actually increase their profits on a daily basis. That's all I have. I'm going to sign out now. I'll see everyone in the next trading video. Okay, I'm going to switch over now and jump into the Discord community to where I can personally start doing some of my own trading and share some of my own entries. But yeah, again, if you're interested in joining and want to become part of our community, find the link to the Discord down in the description portion of the video below. And I'm out. I'll see you guys in the next one. Take care. And if you're trading, please be safe in the markets.